look at the economy now as we enter a very crucial quarter for the Indian economy. The indicators surely seem to suggest that we may have left the pain of the second wave of COVID-19 behind us for now. Of course, all of this is caveated with the hope that a third wave doesn't really pop its head around the corner. Moody seemed to underline this, saying that it has upgraded its outlook on India to stable from negative, believing the downside risks in Asia's third largest economy and financial institutions have reduced. They have reaffirmed India's sovereign credit rating at Baa3, which is just the lowest of the rung as far as investment grade is concerned. It's a little over junk. So they haven't upped that credit rating, but the improvement in outlook could be seen as a step towards the improvement in rating as well. Remember, Moody's had downgraded India last year. So Moody's view is that there is a better economic environment and recovery which is growing. A lot of this has to do with improving vaccination rates, more areas in the country opening up, that's reflecting in services sector, and the formal data that comes trickling in is all undoubtedly showing an upward trend. So is that gap between the reality of the Indian economy and how the financial markets are responding finally closing? To speak on this, I'm joined today by Aurodeep Nandi, India Economist and Vice President at Nomura, Rahul Bajoria, Chief India Economist at Barclays, and I'm also speaking this evening with Anurag Katriar, President of NRAI, to get a sense of how one key component of the services sector, which was truly badly hit, has been responding. Are they seeing that cheer as well? So welcome to all of you. Thank you for speaking with us. Aurodeep, let me begin by getting your take on some of the data that we've been seeing. And there is such a variety of data. I mean, anything from how houses are being registered in higher numbers, or how online sales have been, reporting high numbers, the kind of digital transactions that we've been seeing. Is it safe to surmise that we really are seeing a robust recovery?
Evening, Tawana. I think what you're essentially seeing is recovery from the second wave, right? What you are seeing is a reaction to the pace of vaccination sharply picking up in September versus August. And essentially you're seeing, well, look, there's very easy financial conditions, consumers, there's an extent of revenge buying. So you're seeing a kind of, for the lack of a better word, a dead cat bounce from the second wave. So a lot of sectors are now coming up back to pre-pandemic levels of activity. Some sectors, like mostly the services, are yet to catch up, but they're incrementally picking up. So I think what you're seeing at this stage is sort of the economy recovering from the second wave. A couple of things there. One is it's not like the sectors that have recovered have sort of broken out, right? What has happened is they've recovered and they're somewhat fatigued. Secondly, the indicators that one typically looks at to figure out, well, what's happening to consumption or investment, it's becoming a little murky, and it's becoming murky because of the supply side issues. For instance, take a look at the auto numbers that came out in September. They've been low, and typically auto is kind of a proxy for consumption demand. But the reason auto numbers are low is because they're facing chip shortages. You mentioned the fact that there is a coal shortage happening, and while there's a supply side story to it, it's also because demand is raised and it's not caught up to that supply. So I think what we are seeing now is, yes, there is recovering demand, but the real constraints to growth over the near term actually are on the supply side, which is in order to get energy prices and energy supplies up so as to support this kind of growth. But overall, I think it's again a little too early. Coming up over the next few months, we will have festive demand coming. We'll have areas of public sector workers kick in. We'll also have the government spending that has been parsimonious so far being sort of backloaded in the next half of the year. So we'll have these tailwinds, right? And these will boost up consumption in the short term. We also have good monsoon, so that should be good for the rural economy. I think the real answer to your question will probably come after we go a quarter or two, and we actually see that, all right, with all these temporary tailwinds, so to speak, out, where is the economy settling?
Yeah, so good point there that it's looking good as of now, but it needs to stabilize. Rahul Bajoria, your comment on how it's difficult to gauge, that the data is a bit murky, as Aurodeep put it, because you don't know if there is a lot of demand because of supply side constraints, or is that a dead cat bounce or revenge buying, revenge demand coming in, or is there genuine reversal of the kind of blues that the demand situation had seen post COVID?
Yeah, Tamanna, I'd point out to two things. First of all, when we look at, say, just the forecast, relative to what was expected after the second wave had to, and given the intensity of the health crisis, the recovery has been faster and it has been a lot more stronger almost across every single sector. The second point that's worth flagging here is that any sector, right, which has had supply side issues and where there has been reopening, particularly within services as well, I think the aggregate demand in that particular sector very strong and it has opened up in a big way, and that's sort of coming across a variety of areas like, say, the aviation traffic, railway passenger traffic, now in restaurant falls, hotel and hospitality sector. So I think what it basically indicates, the spending capacity is there, whether it is happening, say, within a smaller set of higher income households, or, it's, in the spirit of the K-shaped recovery, it may not be very broad-based demographic standpoint, but then certainly the spending capacity being high is what kind of comes across. And so even if you have some side issues, it might lead to a bit extended inventory cycle, but the nature of the recovery itself is somewhat optimistic, and I think that is what a lot has been flagged out of Delhi as well recently, where we have heard the chief economic advisor, the principal economic advisor, talk about the recovery being fairly strong, and I think that is fairly consistent with the firepower that is also there on the fiscal side, right? I think the taxation numbers, the fact that you are seeing some indicative spending coming through on the fiscal front in the last few months is likely to basically set us up for a fairly strong end to this particular fiscal year. So we are reasonably confident we are going to get double-digit growth in the current fiscal, and even for next year, growth rates are likely to look reasonably good, even if some of these supply side constraints are likely to remain somewhat sticky in the system.
Let's contrast this with some real world experience on the ground, and let me bring Anurag Katriar here for that. Now, restaurants, we know, have been in a very, I would say, vulnerable situation for the last nearly 2 years now. Things have improved after there has been a reduction in restrictions in many parts of the country. But are you seeing that boom coming back? Or is it because of the restrictions that you're not seeing the kind of recovery? How would you calculate, or how would you assess the demand, Anurag?
Thank you. So I think first thing, there is definitely an upswing in the demand within the restaurant fraternity. And, there is a very smart recovery across the nation, barring, of course, certain segments within the F&B, like your bars and banqueting and catering, where it is, the way they operate is not very great from COVID protocol perspective. But overall, if you look at the F&B, the restaurants, the deliveries, etc., there is a definite upswing. However, the numbers still don't match up to what it was pre-COVID, for a very simple reason, because most of the country is still operating the restaurants with 50% capacity. And on top of that, several states still have some timing restrictions, while certain states have lifted them. Mainly means that you can operate dinner for only those who like to have early dinners. And not many of us like to do that. And which essentially means that the nightclubs, discotheques, and all those places, they don't even stand a chance to recover. Ditto with catering. Having said that, I must say that overall mood in the sector definitely looks positive right now. I think we can definitely see an upswing in consumption. In fact, I was reading a report by Deloitte this morning where it said that the discretionary expenditure being incurred by people is going up. And I believe that F&B is one of those segments which benefits and finds lots of fuel from the discretionary expenses. So all these things sound good, yes, but if you ask me for the real numbers, we are still nowhere close to the pre-COVID numbers. We are probably still at about 70%, 75%, depending on which city you are operating in. But yeah, the green shoots are visible, and we are hoping that with the festive season coming in, this third quarter is traditionally the best quarter for our trade, the restaurants, because it starts with the festive season of Dashera and ends with the New Year's, which is the high point of spending in the F&B sector. So we are hoping that this will work as a catalyst in firming up the consumption, and it will not be like what Aurodeep was saying, that it's like it should not be like a very short-term thing. I am hoping that this will grow further. One thing I must add here is, as the restaurants are opening, their operating hours are going up. We are definitely seeing a good upsurge over there, but there is also a drop in the delivery business. There is definitely a little drop over there, which was expected. I am not saying that this is something unexpected, but it's worth noting. So I think if the capacity utilization is relaxed further and timings are relaxed further, we can hit the pre-COVID numbers.
So again, the same theme that there is latent demand there, but it's a supply side constraint. So people may want to go out more further. COVID restrictions still keep seating capacity and timings at a limit for restaurants, and that's why business gets impacted. Having said that, Aurodeep, I think one factor we must talk about when we speak of recovery in India and in the economy is inflation. Do you think that's one headwind, one speed breaker that we need to worry about?
Absolutely, Tamanna. And I think so one point is the fact that, look, there's actually been a lot of scarring from the pandemic on household income, on just livelihoods of households. And in the melee of data that we see now in terms of normalization, in terms of people rushing back to restaurants and sort of getting back to pre-pandemic level, the true impact of that scarring will probably be visible later. Now, having said that, you're absolutely right. A big problem for the Indian consumer has been a series of these supply side price shocks that have been hitting the Indian consumer since last year. So, inflation flared up since, when the pandemic first struck. And then it's been elevated. You've had fuel prices that have gone up. And then, if you look at core inflation, it's been above 6% for a very long time. You've got LPG prices going up. And look, if you're having power cuts, and a number of countries are having power cuts, so coal shortages, sorry. So if you've got any thermal plant that really wants to import the coal, it's going to be expensive. And what that means essentially is that eventually this will lead to a higher tariffs for electricity. And it's not just consumers. Look, even firms, their margins are getting squeezed. You mentioned the PMI numbers. If you look at the internals, what you'll see is that input costs have soared, output costs not as much. So firms are having their margins squeezed, right? So if there's a hotel that's not able to cater to late diners like me, then the margin of that hotel is getting squeezed. Now, what happens when demand comes back? Obviously, firms would like to pass on these costs to consumers. So the Indian consumer actually has been facing a series of higher costs coming in from global commodity prices, coming in from higher input costs. I mean, anecdotally speaking, Tamanna, I'm searching for a car to buy, and almost all companies have told me that the car prices are going to rise in October. It's because of higher metal prices, because of chip shortages. So I think there are a lot of supply side issues that are there, and these are hitting the Indian consumer. And at some point, these are going to bite.
So, in fact, if you do decide on which car to go for, Aurodeep, you'll probably have a bit of a wait as well.
Absolutely.
Which shows how those supply side issues are panning out. Rahul, do you agree that supply side issues may spoil the party, inflation may spoil the party? And, just your take on the other big question when we talk about revival. Do you think private investment is missing from this kind of jubilation we're talking about? This is one section of consumers feeling a bit freer because of a lack of restrictions and wanting to spend some money. That's essentially what we're seeing reflected right now.
Yeah, absolutely. I think the points that Aurodeep mentioned about what can be basically act as speed breakers, right? I mean, inflationary shocks or supply side speed breakers in the whole consumption story, but then it will not prevent Aurodeep from finally buying a car, right? At some point, he will be pulling the plug on even if the wait periods are longer. But so it could be a case of delayed consumption. Ultimately, what will determine the recovery story, I think, will be what happens with income growth as well, right? And from I think the fact that corporate profitability has been reasonably strong, we have seen household spending improve at the margin, and particularly again, this is I would caveat by saying that there is a lot of heterogeneity in household consumption, but certainly a certain consuming class is back, as restrictions have gone down and as vaccinations have gone up, we have seen that consumption come back. Now it's a tenacity or longevity will be dependent on how the third wave risks play out, how the sectors open up and how that consumption demand peters out. But I think overall, what we are looking at is basically a pretty classical sort of a recovery in certain parts of at least the urban population. I think whether the population sort of plays catch up in that will be a function of what happens with the fiscal spend, what happens with the outlook for the agriculture sector, which is looking okay. I mean, it's not looking that bad. So I think I would still look at it as a glass half full story. I think the supply bottlenecks are going to be a problematic in the near term, but over the medium term, I think it should sort themselves out. And if aggregate demand, we should see that being the dominant factor, which will probably drive the outlook for consumption and investment over the medium term.
We should also talk about employment, and the IHS market figures today talk about employment improving about after 9 months. That's great news. Anurag, I want to ask you about that because I remember in our many conversations over the last 18 months, you have often mentioned how the hit that your sector, the restaurant hospitality business, has suffered has led to a hit in employment as well, and it is a huge employing sector. Is that improving? Is that outlook improving? Are you hiring more in your sector?
Oh, for sure, we are hiring a lot more because as it's a very simple story. As the business picks up, as the volume grows, we need more people. But the kind of job losses we saw in the sector, we reckon it was close to 3 million people who lost their jobs in the restaurant sector alone. Forget about the larger hospitality and hotels. Now, I think we have probably re-employed about 1/3 of them, and we still have a long way to go. But I'm very sure this is a very manpower intensive business. As businesses grow up, the hiring will improve. There has definitely been a huge uptick in re-employment in last quarter or so. There has definitely been that.
That is good news, but this also gives us an idea of why we need to look at the economic recovery story in a more nuanced way. Yes, indicators are good. Definitely, the mood is positive. As Rahul Bajoria said, the glass is half full. But just take a look at this example. If 3 million people in the restaurant sector lost their jobs and 2 million still haven't got them back, they've probably found other ways to make money, but they're still suffering. Their families still are, and they're possibly spending less, contributing less to the economy. So that cycle will take some time to heal itself. But for now, it's looking positive, that's for sure. Thank you so much to all of you for joining us today on the big debate, on the India development debate. Let me